Imagine lending money to a big company and getting paid back with interest, just like a bank does. That's basically how corporate bonds work, and now the Ghana Stock Exchange wants to make that easier for everyday people like you and me. Here's why this could be a game changer. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. The Ghana Stock Exchange says it's working to boost interest in the corporate bond market. In simple English, they want more companies to borrow money directly from the public instead of only from banks. They're also encouraging more investors, including individuals like us, to start looking at bonds as a way to grow money safely and steadily. A bond is simply a loan, but instead of you borrowing from a bank, you are the one lending to a company or government. When you buy a corporate bond, you're basically saying, "Hey, Cal Bank, MTN, or any company, take my money for a while, but pay me back with interest later." So if the bond says 10% interest, and you invest GHS 1000, you'll get GHS 100 in interest every year until the company repays your GHS 1000. It's like earning rent on your money. Right now, Ghana's corporate bond market is small. Most people invest in shares, stocks, or treasury bills, but GSE wants to make bonds a mainstream option because it helps businesses grow. They get funds for expansion. It reduces bank borrowing pressure. Companies don't always have to beg banks for loans. It gives investors steady income. Instead of waiting for share prices to rise, you earn fixed interest. They're planning new education programs and digital platforms so ordinary people can understand bonds and invest easily, even from their phones. If you're new to investing and scared of risk, bonds can be a safe starting point. Here's why. They pay fixed returns, meaning you know exactly how much you'll earn. They're less risky than stocks, since you'll get paid before shareholders if a company struggles. They help you diversify, a fancy way of saying, don't put all your eggs in one basket. Example, if you invest GHS 1000 in MTN shares and GHS 1000 in a corporate bond, even if MTN's share price drops, your bond still pays interest. Ghana's economy needs private sector growth, and corporate bonds can help make that happen. The GSE's push means we could soon see more bonds from banks, telcos, and energy firms, giving everyday people like you and me new ways to invest and earn. It also helps make Ghana's financial market stronger and more stable, which attracts foreign investors too. This isn't financial advice. Before you invest, make sure you research the company, check the interest rate, and know how long your money will be tied up. Share with friends who need to hear this.